Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Friday. These are the stories that set your agenda. Calling for a cut. Fed Governor Chris Waller says US rates should come down this month to bolster a job market he describes as on the edge. Shopping for stocks. US retail sales surge, easing worries about consumer spending and powering the S&P 500 to a fresh record high. This as Netflix earnings beats, with the streaming giant raising its full-year forecast. Plus, a major win for the crypto industry as Congress passes a bill regulating stablecoins, paving the way for their broader adoption. So strong data out of the US, powering the gains stateside to those record highs. It was a decent session for European stocks by the end of the close yesterday, up almost a full percentage point. And today, still on the front foot as you look at European stocks 50 futures pointing higher by 0.4%. Here in the UK, the FTSE 100 is looking to add 25 points. S&P futures stateside looking to build on the record highs of yesterday, above 6,300, looking to add around 0.2%. Nasdaq 100 futures lifted by the fortunes of TSMC, but the data as well on retail sales, on jobs claims, really affirming that this is a US economy that continues to have that resilience. Nasdaq 100 futures looking to add 0.1%. Let's flip the board and have a look cross asset then, with Chris Waller looking to make something of an audition, you may say, in terms of who takes over the next head of the Federal Reserve, with that call for a cut this month, aligning himself with some of the more dovish members, of course, or dovish voices then, calling for further downside in rates for the Federal Reserve. It is a mixed picture, though, from those FOMC officials. Others have suggested there is now space to be patient. Interestingly, the Federal Reserve chair over in San Francisco, Mary Daly, suggesting that 2 cuts are still and should still be in the cards for this Fed. 443 right man on the benchmark US 10-year. You are seeing money moving into treasuries today, with yields down almost 2 basis points on the benchmark. Euro dollar at 116. A bit of a lift for the single currency after the strength of the dollar yesterday. Today, the Bloomberg dollar index is a little softer. 116 on euro dollar. 120,000 on Bitcoin, with that legislation being passed, going to President Trump's desk right now. The first time in terms of at a federal level having regulations around the stablecoin. So back above 120,000 for Bitcoin, and Brent at $69.81, just up 0.4%. Let's cross over to Asia right now. Avril Hong standing by in Singapore for a check on the markets there this Friday. Avril, there's optimism as well broadly across the Asian markets.
Yeah, you're seeing that showing up in stocks, and the region's gauge is headed for a weekly advance, which would be its first in 3. And a lot of this is tracking the optimism on Wall Street overnight, but fueled today in Asia by tech as well, following TSMC's bullish outlook. Yes, it's sounding more prudent when it comes to spending because of macro uncertainties, but overall, the takeaway for investors is about bullish AI demand. That looks really solid. That's helping to lift other tech shares in the region as well. Now, flip the board, because of course we've been focusing on Japanese assets. You're seeing the stocks in the country a bit softer today. The yen is underperforming versus G10. So if you're looking at dollar yen, is nudging closer to the 150 handle. That's despite the pressure coming on the greenback given the Fed speak today. And this is coming into the upper house election that's coming this weekend. That's still too close to call, where rice prices has been a key issue for voters, and where core inflation today showed cooler than expected print, but still it printed well above the 3% handle. And all this coming against the backdrop of a BOJ that's showing no indication that it's ready to raise rates again. And as you know, even though we're seeing long end bonds in Japan today more or less tracking treasuries, they've been coming under a lot of pressure of late because of these fiscal spending concerns. Flip the board. Even if the ruling LDP manages to beat expectations, there's still a 40-year auction next week in Japan that we'll have to clear. This chart, courtesy of MLife's Mark Cranfield, shows you how JGB yields on the long end, 40-year in particular, just hasn't been able to overcome inflation, and part of why the expectation is for still challenged demand at the sale for JGBs next week. Tom.
OK, Japanese assets in focus as we run up, of course, to that election over the weekend. Avra Hong in Singapore, thank you for breaking it down for us and the broader market moves, of course, in that region. Now, Federal Reserve Governor, as I mentioned, Chris Waller, says policymakers should cut US interest rates this month to support a labour market that he says is showing signs of weakness.
I believe that the Federal Open Market Committee, or FOMC, should reduce our policy rate by 25 basis points at our next meeting. So with inflation near target and upside risk to inflation limited, we should not wait until the labor market deteriorates before we cut the policy rate.
Has President Trump or anybody from his administration talked to you about potentially taking Powell's role?
Nope.
Let's bring in Bloomberg's Valerie Teitel. Is this a Chris Waller audition for the top spot at the Federal Reserve?
Look, I think you can be snarky and mention that, but then you also have to mention that Waller has been pretty consistent in his message since the beginning of the year. He's been way more focused on arguing that the downside risks to the economy from tariffs really outweigh the one-time, temporary, as he calls it, price hike from tariffs when it comes to inflation. So he at least has been consistent for months. But why he's raising this now, potentially you can argue he does want the attention of the U.S. president for this Fed chair seat. In this speech yesterday, it was titled "The Case for Cutting." Now he laid out what I see as a dissenting opinion for the Fed decision in 2 weeks' time, saying the labor market is on edge. He even went as far to say that the labor market has hit stall speed and it's flashing red. Now, Tom, the reason why he's arguing this is because he thinks that if you take out the government jobs from the NFP report last month and you adjust for this 80,000 upward adjustment that he sees will be revised away later next year due to BLS revisions, he actually sees that the payroll print last month came near zero. So he's very much worried about the labor market weakening. Remember, economic theory does tell us, and practice of history does tell us, that once the labor market starts weakening, it can then continue to do so in quite a rapid fashion, which is why he's urgently calling for this Fed cut next at the meeting in next 2 weeks. He does also claim that there should be further cuts throughout the remainder of the year. He wants the policy rate to edge towards neutral, which he has previously penciled in around 3%.
Yeah, and yet there is this disconnect, isn't there? Because equities soared to fresh record highs yesterday on strong data when it comes to the consumer retail sales data and jobless claims. 5 straight weeks now of falling jobless claims. Just square that with us in terms of how the markets have reacted to a more resilient U.S. economy as you have some Fed officials calling for cuts.
Yeah, so jobless claims are the lowest since April. We haven't seen a 5-week winning streak in terms of jobless claims dropping for nearly 3 years now.
Wow.
Now, Waller would probably argue that because of this immigration policy under President Donald Trump, it's really hard to parse through the labor market data. You have to really look into the weeds to see what's going on in terms of foreign-born workers leaving the labor market. So that's Waller's argument. But we also saw a beat when it came to retail sales yesterday, maybe showing that those worries about the consumer can be put to bed, at least historically. That really did lead to the equity market having a great day yesterday, both the S&P 500 and the NASDAQ notching record highs. But in Waller's mind, he is way more focused on the path ahead, especially when it comes to the labor market, and is now urgently calling for that rate cut now. And I think this is going to be a very interesting decision in July, just to see how many join him, perhaps, in a dissenting vote in 2 weeks' time.
Watch for the dissenters in 2 weeks' time. Valerie Teitel, excellent breakdown of what we've been hearing, of course, from Fed officials and the market reaction to some of that data stateside yesterday. Valerie Teitel, our markets reporter, thank you. And a reminder that Chris Waller will speak to Bloomberg later today, so certainly stay tuned for that interview. He joins Surveillance at 1 p.m. UK time. Now, U.S. trading partners have 2 more weeks to negotiate trade deals before Donald Trump's higher tariffs are set to take effect. But this week's relaxation of U.S. restrictions on chip exports to China has renewed hope that a deal between the world's 2 biggest economies can be done. Let's get more from Bloomberg's Katia Dimitrieva, who's been following this for us. Katia, what is the state of negotiations right now between the U.S. and China? There've been talk of maybe a grand deal, given that this move to ease export restrictions on some of these chips, which was unexpected, has been pushed through by the Trump administration. Where do things stand? How likely is it that we actually get a deal between these 2 nations?
Well, it certainly was looking much more promising recently, right? You had a softening in tone from the Trump administration. We even had Besant coming out and saying, well, markets shouldn't even be that obsessed about the tariff deadline, which will be, or the deadline to reach a deal, which is next month, sort of walking back any fears that if a deadline is passed, for example, or extended, that they shouldn't be trading as they have been, really, on any negative sentiment. So there were kind of more improvements in the relationship. There's also a sign that Trump wants to start he wants to aim for a summit with the Chinese leader by the end of this year. In order to do that, there needs to be more moves like the softening of Nvidia's chip exports, because those controls had been in place for a while. They're a bipartisan policy. They were also under the Biden administration. And lifting that is really a positive sign, right, to the Chinese government. What we could see kind of in the next little bit is potentially more softening on that front, and potentially, the Nvidia chips and this particular chips that were exported to China, there could be more on that front. It's just one of many export controls that are in place and many options that the U.S. government has to sort of soften things. But there are two things that happened recently in the news that might escalate the situation once more. Wells Fargo, of course, one of their employees was stopped in China from exiting the country, and so that company is now advising others to not travel to China. In fact, is cutting off people from traveling, employees from traveling to that country to prevent that from happening to other employees. So, of course, that is a major issue there, and we could see that potentially flaring up. And the Chinese have also said, this is also fairly recently crossing the wire, accusing foreign agents of taking critical, like rare earths, out of China and smuggling them. So, in other words, hiding them in water bottles and mosaic tiles, which is something that, of course, right now they didn't name a specific country, but has risks kind of escalating in a very delicate situation right now between the two countries.
OK, Bloomberg's Katia Dimitrova. Yes, those exit bans have been used before by China, haven't they? And certainly a concern for some of those Western businesses, US businesses, with a footprint, of course, in China. Katia Dimitrova, thank you very much on the state of relations between the US and China. Here's what else to think about today. 6:30 a.m. UK time, we will break earnings from SAAB, the defence contractor, of course. Really consequential given the defence spend that Europe is pushing right now. Those earnings dropping at 6:30 a.m. UK time. At 7 a.m, we get Burberry sales, so a touch on the luxury space. Of course, Burberry has faced its challenges. We'll see if the sales picture has turned around. And at 3 p.m. UK time, we get the University of Michigan sentiment survey, so building out a picture on what is looking like a still resilient US economy. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. Coming up, we are at the G20 in South Africa, where finance ministers and central bank governors gather under the clouds of a trade war. We'll have more next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Friday, everyone. Now, South Africa is calling for greater cooperation among G20 economies as finance ministers and central bank governors gather under the cloud of President Trump's trade war. Finance Minister Enoch Godongwana told us he's concerned about the impact that tariffs will have on the region.
My prayer, first and foremost, is that the deal should be made by August 1st. And secondly, we if it's not made, it'd be useful that we get an extension until we finalize the deal. Of course, the USA is a huge economy. If we lose a trading partner such as the USA is going to have a major impact and create more unemployment in the economy. And therefore, that should worry any Minister of Finance.
OK, for more, our chief Africa correspondent, Jennifer Tabasaja, joins us from Ballito in South Africa. I think failing to compete, Jen, when it comes to the hatware. But let's start on what's happening in terms of the prospect of a communique at the G20. Are we close to a communique, given all the concerns around tariffs and trade tensions?
Well, Tom, that is sort of the number one question, and that's what we put to Enoch Godongwana, who is co-hosting this G20, as well as South African Central Bank Governor Lesetja Kganyago. Are we actually going to see a statement? Because if you take a look at the previous two finance meetings that we've had this year, there hasn't been a communique that's been produced. There has been a statement from the chairman, and that is because there just has not been a consensus on a number of issues. But all of the delegates that we've spoken to are seeming to express a bit of confidence and cautious optimism, I guess we should say, based on where the dialogues are happening. And they're noting that conversations are happening. Trade and trade barriers and tariff threats are taking up a lot of the energy. They're of course soaking up a lot of the discussion. But the fact that they're actually able to sit around at the table and have these discussions is notable. So, on the first day, we heard a lot from the finance ministers and central bank governors about the concerns for the global economy, how they can potentially look to some of these multilateral institutions to reform them, potentially making them more beneficial or at least supporting more of the global South. And that has been a priority for South Africa as the G20 presidency. But the real question is, are they going to be able to get all of these members on board, especially when you consider some of the members, and I'm going to point out the U.S. and, of course, China and others who have been very vocal about their distance on a number of issues. And so that is key to what we're paying attention to today.
OK, so we'll see if they get that communique across the line. What has been dominating discussions beyond that, Jen?
Yeah. The biggest discussion, Tom, is really how do they advance some of the priorities that have been set before. Even when we talked to Finance Minister Enoch Godongwana yesterday, he had said that there have been a number of issues and discussions that have been brought up at previous G20s that have yet to be actually implemented. So instead of trying to break new ground here at this G20, what are the ways in which they can find harmony and can find unity among some of these members in order to actually get to the finish line? And so, I was mentioning reforms of multilateral institutions. They also want to try and bring in ways in which they can support development growth for the global South and the African continent, and put that in the context of the global economy and see how those two parts can work together a little bit better. But the real sticking point, I think, that has been dominating discussions, and again, we've been hearing from a number of ministers, is this idea of climate finance and sustainable finance, something that the U.S. has vehemently said that they oppose and will not get on board with. And also this issue of global imbalances. Finance Minister Godongwana told us that China took issue with that in their discussions. And so the question is, where can they potentially find room to advance issues in which they've already agreed upon, potentially in previous summits, and maybe save some of the new negotiations for later on? And then again, where does that leave multilateralism more broadly, and the U.S.'s role in multilateralism, especially as they take over the helm of the G20 presidency after November? What does this all mean in the global context? So we're going to wait for the rest of the day to see how the discussions play out and hopefully get more insight into where these members are right now.
OK, a big moment for South African leadership at the G20. Jennifer Tabasaja on the ground for us, of course, our chief Africa correspondent. Jen, thank you very much. Coming up, the UK and Germany pledged to defend each other in the event of an attack. We will have more on that treaty next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, on his first visit to Britain as German Chancellor, Friedrich Merz has signed a treaty that includes a commitment for the two nations to assist each other in case of armed attack, part of a wider reset of post-Brexit ties between the two countries. UK correspondent Lizzie Burton has been following this for us and joins me now around the set. What are the details then of this treaty, Lizzie? How significant is it?
Well, it's significant, as you say, that this is the first trip for Merz as Chancellor to the UK. It follows on the heels of that visit from Macron, so it suggests that Starmer's trying to have closer ties with Europe post-Brexit. It's called the Kensington Treaty, this, and you touched on the defence aspect. It is not a replacement for Article 5 of NATO, this collective action principle, but what it does say is that they're committing to this new long-range missile system in the next decade. There's also a part on using the e-gates when it comes to passport control. Of course, that was something that we wanted details about at Lancaster House when you had that UK-EU meeting as well. It's not fast enough for my trip to Frankfurt for the ECB meeting next week. I feel your pain. Yes, but it will be coming in next month, they say. And then the other part is on migration. So Germany is going to commit to making it illegal to facilitate irregular migration to the UK, which of course is a huge problem, that cross-channel migration. But I think what we should note is that both of these leaders are having issues on the domestic stages. So on the international stage, they're seeing a way to make more progress and to feel more comfortable.
The e-gates thing is a real issue, isn't it? And it's going to be for some people. I was sat in Munich airport for an hour trying to go through passport control. Brexit dividend.
Pain.
When it comes to supplies of weapons to Ukraine, this is really important, of course, at a time when Ukraine continues to face that pressure from the Russian aggression. What details do we have in terms of how Germany and the UK may work together to support Ukraine?
Yeah, so the UK might join Germany in buying US weapons. So these are Patriot missiles. For each battery, it costs upwards of $1 billion. And for each missile, they're about $4 million each. So a lot of money, this. But, of course, it's coming together to stand up against Vladimir Putin, this joint threat. Discussions at a very early stage. But Trump has promised, of course, more weapons for Ukraine. And he's announced these new sanctions on Russia, threatening 100% secondary tariffs on Russia unless Putin agrees to a ceasefire within 50 days. And so this is Europe standing together to do its part in that battle.
Lizzie Burton, thank you very much indeed in terms of the update when it comes to that important visit, of course, between the German Chancellor Friedrich Merz on the ground here in the UK yesterday with the UK Prime Minister and some of those deals that have been signed. Meanwhile, the German Chancellor has rebuffed the European Commission's new €2 trillion budget plan, dismissing any attempt to tax his country's companies. Speaking in London, Friedrich Merz said the EU will have now to make do with the funds that it has at its disposal. He predicted a, quote, tough fight over the budget for the next 2 years. President Donald Trump has authorized the Justice Department to seek the release of grand jury testimony from the prosecution of Jeffrey Epstein, bowing to mounting pressure for more transparency about the late disgraced financier. Trump's move came after the Wall Street Journal published a story alleging that he once sent a suggestive birthday letter to Epstein. The president called the letter fake and threatened to sue the paper. And President Trump has been diagnosed with chronic venous insufficiency. It's a common condition causing swollen ankles. The White House medical unit says he remains in excellent health with no signs of DVT, heart failure or systemic illness. Doctors attribute recent hand bruising to aspirin use and frequent handshakes, calling it benign. Fed Chair Jerome Powell has denied claims that renovations to the central bank headquarters in Washington include VIP elevators. He's written a letter in response to correspondence from the White House Office of Management and Budget. The criticisms of the $2.5 billion project have coincided with a continued push, of course, from Trump and administration officials for the Fed to slash interest rates. Coming up, TSMC delivers stellar earnings but says tariff uncertainty is having an impact. Catch our exclusive interview with the CFO of TSMC. That is next. This is Bloomberg. Good Friday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Calling for a cut. Fed Governor Chris Waller says US rates should come down this month to bolster a job market he describes as on the edge. Shopping for stocks. US retail sales surge, easing worries about consumer spending and powering the S&P 500 to a fresh record high. Plus, a major win for the crypto industry as Congress passes a bill regulating stablecoins, paving the way for their broader adoption. Let's get a check now in terms of the earnings story when it comes to the defense contractor SAAB. This is a stock that is up over 100% year to date. In terms of second quarter orders, with that focus, of course, in terms of European defence spend, the number coming in at 28.4 billion Swedish krona in terms of orders in the second quarter. That's a beat in terms of sales for SAAB. It is a beat in the second quarter. Operating profit also a beat in the second quarter, coming in at close to 2 billion Swedish krona. The estimates had been for 1.7 billion. In terms of the sales number for the second quarter, a beat at close to 19.8 billion Swedish krona, and above the estimates there, of course, of 18.1 billion. So it's a beat in sales, it's a beat in operating profit in the second quarter for this defence contractor, the maker, of course, of the Griffin fighter jet. Full-year organic revenue. This is the projection. They see full-year organic revenue increasing between 16% to 20%. So at the top end, they are raising the forecast in terms of full-year organic revenue. They are expecting a higher print as, of course, that spend around defence steps up in Europe. Now, broadly across the markets, let's get back to the picture. As you saw, the S&P 500 and the Nasdaq 100 breaking fresh record highs, and the futures point higher as well, looking to build on the optimism of yesterday with the data out of the US on retail sales and on jobless claims confirming that there is still resilience in this US economy. And then Chris Waller, the governor, of course, of the Federal Reserve, coming out and saying the Fed should cut this month. European stock futures pointing higher by 0.4% after gaining almost a full 1% yesterday by the end of the close. Nasdaq 100 futures, you're looking at gains of 0.2%. Here in the UK, the FTSE 100 looking to add 26 points. S&P E-minis, after that record high yesterday, punching up again, 0.2%. Let's split the board and have a look cross asset. You're seeing money moving into treasuries, partly on the commentary from some of these Fed officials. Chris Waller, of course, front and centre. 4.43 right now in the US benchmark 10-year. Yields down almost 2 basis points. The dollar is a little softer. That's giving a lift to the euro, which is trading at 116, just up 0.1%. And Bitcoin, with a focus on regulation around stablecoin, back above 120,000 per coin. Brent also stronger, up 0.4% at $69 a barrel. Now, the CFO of TSMC has told Bloomberg the company plans to be cautious with capital expenditure because of the uncertainties around tariffs. The chip giant reported stellar earnings yesterday that beat estimates across all metrics and, by the way, fed into the upside around the tech space in terms of the equity performance yesterday globally. The CFO, Wendell, Wang, has been speaking exclusively to Bloomberg's Annabelle Drewlers.
Congratulations on another strong set of results. What were the key takeaways for you from the earnings?
Well, we'll continue to see the strong demand for AI. And that's the reason that we revise up our whole year outlook to around 30%. The continued strong AI demand leads to continued strong demand for our leading edge technologies, underpinned by the growth of the whole HPC platform. So that's one very important factor.
You do have that raise on the full-year growth forecast. What you didn't raise, though, and I think what was really picked up by a lot of people, was the CapEx, because you've kept that at $38 to $42 billion for 2025. Why not lift that as well?
You know, CapEx invested in any given year is for the future business opportunities. So as long as there are future business opportunities, we will not hesitate to invest. Now, having said that, we are mindful about the macro uncertainties these days, primarily related to the tariff policies. So we are being prudent in planning our CapEx, actually in business plan, including the CapEx and capacity planning.
We can get to the tariff risk in a few moments, but I do want to talk about what we've sort of seen over the past few quarters, because in the last 2 quarters, if you average that year on year, you're looking at around a 95% increase. Is that sort of spending sustainable, do you think?
I think, again, it's a company of our size. It will be unlikely for the capex dollar to suddenly drop significantly in any given year. And also, going back to my previous comments, as long as there are business opportunities in the future, we will not hesitate to invest.
And you did outline those business opportunities, and you did as well mention about speeding up the production in the US in particular. So how much more spending do you need to bring forward then, especially when you're looking maybe to take advantage of the tax credits?
There are a couple of questions here. Number one, how much we need to spend in pulling in. Well, we're pulling in the phase 2 by several quarters. So I wouldn't say we need to spend too much capital expenditures for doing it. The other question that you have was about the investment tax credit. Investment tax credit does help us. In the next 5 years, it's definitely generally positive, but in the next 5 years, the benefit is not that much. Think about this. The investment tax credit is to offset the asset value, the fixed assets that we purchase. And the benefit will come from depreciation in the future years. And depreciation gets amortized over the years.
The macro uncertainty, does that relate primarily to the risk around tariffs, or is there something else that you're seeing?
The tariffs policy will be the main uncertainty in today's market.
And so what level of tariffs are you factoring into your calculations?
Basically, tariffs will not directly impact us, but it will impact the end markets. So if the end market's demand drops, and ultimately it will affect us. We do have certain assumptions in there, which I think everybody has its own assumptions on how much impact there may be.
TSMC's CFO, Wendell Wang, speaking exclusively to Bloomberg's Annabelle Drulis, who joins us now from Taipei. Annabelle was on the ground, of course, for those results and that interview. Annabelle, what for you then stood out in this interview with the CFO of TSMC?
I think if you were to sort of wrap it into one word, you could probably say conservative. I think that was the key takeaway. I mean, this is a company, as you said, it's reported very strong results in the latest quarter. It's lifted its full-year profit growth forecast to 30%. But even if you take stock of how the company has performed in the first 6 months, the outlook for the third quarter, which is above that 30%, it then implies that maybe you're going to have, or there's the possibility of some sort of sales decline in the fourth quarter. And our Bloomberg intelligence team, for instance, was saying maybe you could see a 10% sequential sales drop that's being implied right now. So I asked Wendell Wang about that. He said that was a possibility, but again, it just comes down to those macro uncertainties and how they're trying to factor in tariffs. Yes, they don't see themselves as really being having a first-order impact, given that they're more of an exporter, but still they will have an impact in the sense that they are scaling up their production in the US in particular. They've got really big plans to bring 6 fabs online, advanced packaging or advanced manufacturing fabs rather, 2 packaging fabs, 1 R&D facility as well. So they will have a bearing there. But also other parts of the conversation talking about the supply chain, for instance, how they're trying to encourage more of the Taiwanese companies to move to the US, and as well perhaps some of the challenges they face in building out the ecosystem, which he said is something that the US administration should expect to take decades.
Yeah, and I'm seeing a line crossing right now, which ties into this story. Nvidia's Jensen Huang meeting China's commerce minister. So Jensen Huang is still there on the ground in China, and of course, a major customer for TSMC, which of course churns out many of their GPUs and their AI accelerators. When it comes to currency effects, Annabelle, there was some interesting commentary in the interview and yesterday in terms of the call on the earnings call, because a lot of the cost base is in Taiwanese dollars, which has seen a bit of strength, of course, but they're booking sales in the US dollars. What do they talk to you about? What did Wendell Huang have to say? What did the CFO have to say about the FX effects?
Yeah, this is actually having a really big impact on the bottom line. So, yes, as you said, they're basically making all of their sales in US dollars, but a lot of their costs are in Taiwanese dollars, so around 75%. And because you've seen that really rapid appreciation in the Taiwanese dollar over the course of this year, that is, of course, having a big bearing. The question for Wendell was how they're actually going about managing that. And he tried to sort of push back on some of the risks around this. He also made the point that they have seen these sort of currency moves in the past. They were able to get through them, to manage them as well. But I was very curious to understand more about the tools that they're using in particular. He said that they were looking at things like simply selling the US dollar in the spot market. We've seen them using forward contracts, and they've also been injecting dollars into their TSMC global operation as well. So $10 billion was the latest injection we saw. It was actually a record. And he said maybe they'll have more of that to come. But he said that they do prefer vanilla strategies around hedging, but it's certainly something that they continue to evaluate on a near constant basis.
OK, Bloomberg's Annabelle Drulas on the back of that exclusive interview with the CFO of TSMC joining us out of Taipei. Annabelle, thank you. To Netflix now, on the earnings story there with the streaming company in focus. Shares are lower in extended trading despite second quarter results that exceeded analysts' expectations in every metric, with revenue topping $11 billion. The world's most popular paid streaming service also raised its forecast for full-year sales and profit margins. For more, let's bring in Bloomberg's Shirley Zhao. Shirley, what are the reasons then for Netflix's better than expected results in the second quarter? What powered those earnings in Q2?
Right. So actually, Netflix's result for the second quarter is quite a pleasant surprise because the second quarter is usually a slower season for Netflix. It typically adds more subscribers at the beginning and the end of the year. But during this season, two of Netflix's most popular shows were released, including the third season of Ginny and Georgia and the final season of Squid Game. And these shows really helped Netflix boost its performance. And there is the currency issue. The U.S. dollar has been quite weak throughout the quarter, and more than 2/3 of Netflix's viewers are outside of the U.S. So these factors combined contributed to Netflix's success during the second quarter. What challenges is this streaming giant facing going forward? A really solid, as you say, set of results. Does that continue, or are there some headwinds that this company has to face up to? So Netflix is definitely facing some challenges in the rest of the year and the years to come. First, its share of total TV viewing in the U.S. hasn't really changed over the past year, and its average customer hasn't been watching more TV than before. And the streaming service market is only becoming more crowded with more competitors, including in Asia, which is one of Netflix's most important market in terms of growth. So Netflix is going to face more intense competition in this field. And also, its share prices have almost doubled over the past year, and it's now trading at near a historic high back in 2022. So if its results are anything short of meeting analysts' enthusiasm and investors' expectation, it's at risk of becoming a disappointment. OK, almost priced to perfection as we see a bit of pressure on the stock after hours. Despite that beat, Bloomberg's Shirley Zhao, thank you very much indeed on the earnings coming through from Netflix. Staying with TV, The Late Show with Stephen Colbert is to air its final episode in May of next year. Colbert, who's hosted the programme for a decade, announced the programme's end during a taping yesterday. Colbert replaced David Letterman, who created and hosted the show for 22 years. CBS, owned by Paramount Global, said the council
cancellation was purely a financial decision against a, quote, challenging backdrop in late night. Coming up, a watershed moment for the crypto industry as Congress passes landmark legislation. We'll have the details, what it means for the crypto sector. That's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the US Congress has passed the first federal legislation to regulate stablecoins in what's been described as a watershed moment for the crypto industry. It paves the way for the broader use and broader adoption of stablecoins in everyday finance. Bloomberg MLive executive editor Mark Cudmore is here with the market reaction and the implications. How significant is this? What is the impact being? I mean, I'm seeing Bitcoin right now, the biggest cryptocurrency by market cap, of course, back above 120,000. So there's been a lot of factors, a lot of catalysts for the crypto space since President Trump came in to office for the second time. This seems to be another one.
Yeah, I think this is big. And I think that a lot of the developments we've seen over the last year or two to get kind of financial adoption in the crypto space have largely focused around Bitcoin. And in reality, that has been the dominant space. This matters much more for the rest of the crypto sphere. And in fact, while you're seeing Bitcoin up at a record high and therefore it's getting the headlines, actually, it's not really seeing much gains in this. It's seeing small amount of gains. The real gains, the whole rest of the crypto sector. So you're seeing things like your Ethereum, or your Ether, I should say, is the coin, Ripple, Solana, these kind of coins are really, really surging. Now, there's a few other factors going on to some of them, but overall, this much hyped crypto week has delivered for the broader crypto sector, but it's much more for the altcoins, as you call them.
So this is much bigger than just Bitcoin. How sustained do we expect the upside to be? Are there more catalysts we should be looking at for the broader crypto space? Is this sustained upside?
I think this is about as exceptionally supportive environment as you can get for crypto, and I say that as someone who is generally a deep crypto cynic. But you know, you're basically getting massive kind of the largest economy in the world is kind of adopting this as being, you know, authorizing it as general use in the financial system. At the meantime, you're getting an undermine of kind of institutional credibility in the mainstream space. You're getting policy credibility undermined. You're also getting pressure on rates. You're getting dollar weakness. For many people, crypto at its core is a bet against fiat currencies, and fiat currencies are being undermined not just on the dollar side versus what's happening at the Fed, but also because the concerns about long-term debt sustainability. Now, if you want the last kind of cynic's throwaway line, if we reach the zombie apocalypse and, you know, fiat coins don't work very well, your crypto, your line in your spreadsheet's not going to help you much either. But however, on the path to the zombie apocalypse, your crypto coins might massively outperform your fiat currencies.
I love the fact that we got zombie apocalypse. I can't even say the word.
It's a hard word at this hour of the morning.
On a Friday morning, but I'm glad you got that in.
Yeah.
We should also note, of course, that President Trump's own sons have skin in the game when it comes to the crypto space. And it's a lot about what President Trump has been pushing in terms of liberalising and setting some guardrails around, or at least some kind of guiders when it comes to the crypto space, and the upside has been there, hasn't it? MLive strategist, or indeed MLive executive editor, Mark Cudmore, thank you very much indeed on some of the changes that have worked their way through Congress when it comes to crypto and particularly stable coin. Now, some of the stories making the news this Friday. Bloomberg understands AI startup Perplexity has raised fresh capital in a deal that values the company at $18 billion. Founded in 2022, Perplexity is known for its AI-powered search engine that competes with Google. Sources say the firm brought in $100 million with the financing, and the deal is an extension of a previous round from a few months ago that valued the company at $14 billion. Amazon is cutting jobs in its cloud computing division, making it the latest big tech company to pare its headcount amid rising costs for artificial intelligence. A company spokesman said the firings affected various teams at AWS, or Amazon Web Services, the world's largest cloud computing service. CEO Andy Jassy said in June that he expected Amazon's workforce to decline in the next few years as the company uses AI to handle more tasks. Meanwhile, Meta has hired a pair of key AI researchers who worked at Apple shortly after poaching their former boss. Bloomberg understands the social networking giant hired Mark Lee and Tom Gunter for its superintelligence labs team. The pair worked closely with Ruoming Peng, the chief of Apple's large language models team, who Meta poached earlier this month. Sources say that to secure Peng, Meta offered a compensation package worth over $200 million. Man Group has cut jobs for the second time in a year and reshuffled its leadership as management continues to overhaul the world's biggest publicly listed hedge fund firm. The London-based firm told staff in a memo that Greg Bond, Chief Executive Officer of Man Numeric, will become the new Chief Investment Officer for the group in a newly created role. The company says it's made a small reduction in its global headcount. Plenty more coming up. Stay with us. This is Bloomberg.
I believe it makes sense to cut the FOMC's policy rate by 25 basis points 2 weeks from now. And looking to later this year, if, as I expect, underlying inflation remains in check, with headline inflation data reporting modest but temporary increases from tariffs that are not unanchoring inflation expectations, and the economy continues to grow slowly, I would support even further 25 basis point cuts to move policy towards neutral.
So I'm of the mind that, the summary of economic projections we put out, which had 2 rate cuts for this year, I think that's a reasonable outlook to have.
I find it appropriate to hold our policy rate at the current level for some time.
Fed policymakers speaking there ahead of the blackout period at midnight tonight. And you're seeing the bond markets reacting to that. Treasuries bid yields down across the curve, particularly on those Waller comments. In terms of the economic data that we've seen out of the US, whether it's retail sales increasing by 0.6% or a 5th straight weekly gain in terms of, or downside, as to say, in terms of jobless claims. So 5th straight week where you've seen jobless claims actually falling in the US. It's a reminder that there is still that resilience, despite all the concern about the tariff impact. And yes, we did see some evidence of maybe tariff pass-through coming through on the inflation data, particularly when it comes to goods. But broadly, you've seen the economic surprise, and this is the Citi economic surprise gauge, and you've seen ticking up because that resilience on the headline basis when it comes to retail sales, when it comes to jobless claims, when it comes to the labour market is still there. For the US, just worth reflecting on. When it comes to the UK, it's a slightly different picture. Let's flip the board and have a look around some pretty big bets around the BOE. We've had the inflation story, of course, the highest level in about 18 months. Wages higher in the UK as well. Despite that, you have some bets being put on in the options markets around 3 cuts from the BOE this year. That is rubbing up against the money market bets of 2. And, of course, some of those bets have been pared back on that stronger inflation data. But nonetheless, this is a contrarian move that's come through in terms of those options trades. Just worth thinking about as well. For the BOE, currently priced in just around 2, but those bets are in place. For Bloomberg Terminal users, by the way, you can access these charts and others used throughout the show at GTV Go on the Bloomberg Terminal. The opening trade is up next. This is Bloomberg.